Hey, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And today we're going to do an interesting topic that you don't actually see, I feel like, on YouTube too often. We're going to do a little bit of a post-loss analysis about like a stock trade that we entered that didn't work out as well as we'd like to. That's one of the ideas of this channel is that full transparency. Dylan and I are not completely new to this, but we're both still really learning on our own investment pathways. So the idea is that we're going to help you see what happens when one doesn't go the way you want it to.
Yeah. And when you break every single one of your rules in a separate video that you say, here are the rules.
Yes.
I have a swing trade video where all the rules are laid out, broke all of them for one of them for this trade.
Rules are meant to be broken. Where's that quote from? I don't know. Certainly not someone that made a lot of money in the stock market.
Yeah, probably not.
All right. So my lost $903 on this one trade. And the interesting part is I actually made a value pick video about this. So we'll link that in the description here if you want to take a look at it. To see what I was thinking before I got into this trade, and then I'll tell you what I'm thinking now. Okay. So I entered the trade on February 19th for $76.96 a share. I'll show you what the graph looked like. HOLX is a medical imaging company. Predominantly, they also do lab testing. So that's one of the things they've been really volatile recently is because they're really involved in the COVID-19 testing. And as COVID-19 cases have dropped and testing has also dropped with it, their stock has had quite a significant pullback. I tried to catch a falling knife, and I paid for that price. So we're going to talk a little bit about it. Yeah, I know, right?
Getting cut by those knives, man.
I know, right? Just let it fall on the floor, So I entered the stock here, as you can see. It turns out that it would not been a great entry point. I don't know what the hell I was thinking. Apparently, I was trying to pull a little bit of a swing trade intermixed with a long-term value trade in a company that I had some reservations about. And in the interim, there was something else that kind of transpired, which helped reaffirm my reservations, if you will. They closed on a purchase or entered into a deal to purchase a unit that had for $129 million that had like $30 million in revenue last year that they thought might be accretive by like 2023. And I'm like,
it's not a good idea.
Yeah, I get the impression that the HOLX management team loves to acquire companies, having engaged in several last year. Not always what I think to be of stockholder net value. So that if you look at my HOLX video, actually, you'll see that I did mention that as one of my concerns or reservations about the company. Well, anyways.
Yeah.
Entered here. Yeah, then I sold immediately the moment I shouldn't have sold. One of their competitors in the COVID-19 testing space reported that they had 30 to 40% quarter-over-quarter decline in their testing volume. HOLX went from being up, I want to say 2 or 3% that day to down like 6%. That was right about the moment I decided to pull the trigger.
Yep. What's interesting about that is that follows trader psychology. That's why resistance and support lines actually work. Is if you have a crowd of 1,000 people all at the similar entry point, they all get nervous around the same time, sell around the same time, and take the same loss. It's very interesting.
Yeah, it was pretty funny. It's one of those days too where I wasn't particularly busy at work, so I had some spare time. Otherwise, I probably would never even have known that this happened. But I happened to be checking, and I saw it, and I was like, "Oh, wow, that's not good. What's going on?" Oh,
sometimes it's bad to have access like that because it closed above 70, 50 or whatever.
Yeah, that's why Warren Buffett tells that story about or that thought process where you should only own companies that you'd be willing to be trapped on a desert island and not able to check the stock price for 10 years. This is not one of them. I've decided. I don't know. I broke plenty of my own rules. I won't enter a trade. I think this is risky for quite a while. I didn't have the emotional fortitude to ride this one out. I did want to tell you, I've ridden some pretty questionable moves out, that COVID crisis last March. I rode all the way to the bottom and all the way to the top.
No, you got pretty solid hands.
Mine
depend on the day. Sometimes I just have the paperist, just complete paper hands. Paperist hands?
Yeah, that sure. That works.
All right.
But yeah, it's it can get pretty emotional sometimes. You feel like you're losing your money. So like, this is exact opposite of what you want to do when you buy and sell stock. You want to actually ideally buy here and then sell there. But
No, had you been short, you would have made a lot of money.
Perfect. Yeah, that would have been great. So all in all, lost $903.
And what? So percentage wise, what is that like?
Around
7%,
10-12% negative move on that stock, somewhere in that ballpark.
No, of your account. What was it? Was that like 1.4 or something?
I didn't do the math. I'm actually still up over the same time period as the stock because one of my other value pick, that Kimball International, has worked out well. And my other, I was investing in some banks and stuff like that have done pretty well over the last month. So I'm still actually up. But yeah, I would have been up by another $903 had I not entered this trade.
True.
So, this is kind of my takeaways for things that I messed up on in this trade. I got into it when I wasn't 100% confident in the management team's ability to execute on shareholder net positive, kind of movements. And then I got emotional exactly at the wrong time. And this is another one that I'm kind of guilty of is I feel like, some of the well-documented, well-covered companies out there that have, all these analysts telling you what they think is going to be a good price for it in 10 years. See my $1,400 stimulus check video, or our stimulus check video. But, I was hunting for value in an area that I felt like it was a little undercovered by the big analysts, trying to be like too smart for my own, britches, I guess. I don't know. So that's how I got burned on that deal. Now Dylan's going to tell us about one of his recent forays into the red column.
Yeah. So mine's $5,500. Nice smile, Vinny.
Yeah, it happens, man.
It ended up being like almost 10% of my account. So basically, the rules I broke were I number one, I got rid of the stop loss, and I have the order of events in the next thing. And then I did incorrect sizing, and I averaged down like an idiot instead of just taking the loss. And usually I'm really good at taking losses, but I thought that this one was definitely going to go back up because usually, I'll lose like $400. I'm out, and then I make $1,000 the next trade. Who cares?
Yeah.
Oh, all right. So next slide here.
Got a little emotionally invested in this one, huh?
I did, yeah. So I bought 200 shares on February 16th at 58.86. At that time, that was one of my swing trade picks. And my stop loss, I had recommended like 55.90 or something like that. So 200 shares may seem like a lot, but at that point, I would be losing $600 or 1%, which is what I usually risk on a trade. So 1% is fine because if I make 2 or 3% the next trade, who cares? Where I really went wrong is I canceled my stop loss because it opened at that price. And I was like, oh, crap. I don't want to get out of this fast. I've been in it for like an hour. So I added 50 shares, right? February 22nd, just tanks. The entire sector's tanking. I'm like, oh no, right? So I just say, screw it. Let's throw in another 10 grand. So I bought another 200 shares, no stop loss whatsoever still. Total amounts, 24,307, cost average at $44 to $55 a share. 223. I sold everything between like multiple transactions, but it was between 41 and 42. The stock actually ended up going to like 36 that day.
Wow.
So that's the loss. There's another slide here.
Yep.
So those arrows, the bad thing about a stop loss, had I had it, it would have saved me, but those arrows you can see, so the bottom of the candle is the opening price. So you can see that it gapped down, meaning it opened way lower than the other candle. So even if you had a stop loss right there and you were still in that trade, even though you shouldn't have been because it broke every possible rule, you would have gotten screwed because it gapped down and it gapped past it. Another gap down on the second arrow right there. You can see that goes all the way down to like $37-ish or whatever. So yeah, that was a rough trade. That was not good. Then there's next slide.
Okay.
So trading depression. This is it's not so much depression. It's more what you're feeling during the trade, right? So Vinny felt this with when he saw the $67. So basically, at first you have denial because you can't believe that the market's going against you, especially plug, right? Because that went from like $2 like 75 over a long stretch. It was just always going up. So anger, I don't ever get this one, but more like if you blame the market or you blame people shorting the stock, like bargaining is the most dangerous. Bargaining is where you add. I'll just average down and I'll just try to get back to even, right? That's not good. So depression is when you finally realize that you made a huge mistake, you lost the money, and then acceptance is you exit the trade, and then the next day it goes back up a little bit because that's how this works.
Yeah, of course.
But I usually risk 1%. I ended up risking 10. So kind of a bummer.
Yeah, it happens. The real lesson here, guys, if you're going to do crazy things in the stock market, is get a friend like Dylan, because he'll make your mistakes seem small in comparison.
There you go. Now I will say, I was at like 67 grand on my account. At one point during this correction, I was down to 41. This is really bad. Now I'm back up to like 58 or 59.
Yeah, that's a hell of a move.
Not good. So every loss is a lesson. People spend 100 grand or 50 grand on education. In trading, your losses are the education. So just look at it that way. It's a lot easier to rationalize. Me and Kenny or me and Vinny spent like 100 plus on school. So
yeah, kind of, I guess. You got to keep in mind here too is like we were kind of talking about paper trading and things like that. These are the things that you notice when you're really invested with real money, real life-changing amounts of money. It's like when your emotions will be tested, not when you're paper trading.
Yeah, paper trading, you don't get any of those 5 steps, excluding the dangerous bargaining. You'll just average down. It fails. You're like, all right, well, I lost this trade. I'll just learn and go on to the next one. You did not learn at all.
Yeah. Yeah, I think investing in the market is much about learning about your own emotional tolerance and like what sort of response you can expect from yourself in various situations that are emotionally taxing sometimes.
Oh boy.
Yeah,
but that's our losses.
Yeah. Anything else you want to add? No. Well, thanks for tuning in, guys. We'll see you on the next one. Hopefully the next one will be a much nicer win. Maybe celebrate a big win video. What do you think?
I don't ever talk about my wins, to be honest.
Yeah, I know. It's what's the quote about winning? I'm sorry. Losing teaches you many things, the least of which is how much better it is to win.
Yeah. All right. There you go.
Yeah, we'll close on that one. Thanks again, guys.
Thanks, guys.